Thinking of investing in bonds? Great, but before you invest, make sure you're not making these common beginner mistakes. The first biggest mistake is chasing high returns without checking the bond's rating. Different bonds offer different levels of return depending on the issuer's profile and rating. Higher returns call for closer evaluation. That's why it's important to always look at ratings and invest as per your risk appetite. Mistake number 2, investing through unregulated platforms. To make bond investing safer, SEBI introduced OBPP regulations in 2022. Platforms registered under these rules follow strict guidelines for transparency and investor protection. That's why it's always better to invest via SEBI-regulated OBPP platform. Grip Invest was the first company to secure SEBI's OBPP license. And the third mistake is putting all your money into a single type of bond. It's always better to spread your investments across different bonds and maturity periods. This helps reduce risk and provides more consistent returns. The fourth mistake is not checking liquidity. Some bonds can be sold before maturity, while others lock in your money for the full term. Always check if the bond offers liquidity that matches your needs. On Grip Invest, you can sell bonds anytime and enjoy the flexibility in investments. So, if you're investing in bonds for the first time, keep these points in mind. Avoiding these small mistakes can save you from big losses. Follow Fixed Returns Academy for more such videos.
Investments in debt securities, municipal debt securities, securitized debt instruments, mutual funds are subject to risks, including delay and/or default in payment. Read all the offer-related documents carefully.